Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. Scooter rental and electric two-wheeler manufacturer Bounce lays off about 5% of its staff. Sources say that the layoffs across customer support, finance and other segments are to help cut costs. That's a Money Control report.
Agri-tech firm Cropin raises 113 crore rupees from new investors Google and JSR Corporation as well as existing investors. The funds will aid in expanding its cloud offering.
Senior care service provider Atulya gets 77 crore rupees from a fund managed by Morgan Stanley India Infrastructure. The company plans to expand services across South India by having 2,500 beds and serving 50,000 seniors in the next 2 years.
The Delhi High Court hears Bharat Pay's plea seeking a gag order on former MD Ashneer Grover, observes that the two parties may have had a falling out but can extend courtesy. The court allows Ashneer to red flag leaks to media. Public comments by Bharat Pay. Ashneer Grover's lawyer says that he will advise Ashneer to exercise some restraint.
Meta announces Vikas Purohit as the Director of Global Business Group in India to lead the strategy of working with advertisers and agency partners. Purohit will spearhead the company's relationship with the leading brands and advertising agencies to drive Meta's revenue growth.
Twitter makes further staff cuts in the trust and safety team handling global content moderation and in the unit related to hate speech and harassment. Bloomberg News reports that at least a dozen more cuts affected workers in the company's Dublin and Singapore offices.
Salesforce looks to cut costs by $3 billion to $5 billion. CEO Mark Benioff says the company plans to cut jobs by 10% and close some offices, adds that there could be more layoffs.
Ant Group's founder Jack Ma will give up control of the Chinese fintech giant in an overhaul that seeks to draw a line under the regulatory crackdown. Ma previously possessed more than 50% of voting rights at Ant, but the changes will mean that his share falls to 6.2%. And those are the headlines that we are tracking for you today on Startup Street. Now, fintech platform CreditBee has raised an additional $100 million in primary funding from Advent International in an extension of its Series D round. With this, it has now closed the second tranche of the $200 million Series D fundraise. The fintech is going to deploy this additional capital towards scaling the existing business and diversify its product offering by venturing into digitally enabled financial products. Joining me now to talk about this funding and the outlook for 2023 is Madhusudan Ekambaram, the co-founder and CEO of CreditBee. Madhu, thanks very much for joining us again here on Startup Street. You've closed the Series D funding round with this $200 million now. We understand that the company is valued at close to a little under $700 million. Could you confirm that for us?
No, so thank you. So one is definitely we have closed our Series D. I think last time when we discussed it was a tranche one, which was of 80 mil, and there's an additional 120 mil with Advent leading the round with about 100 mil, and MUFG, Mitsubishi UFG Bank, which is one of the largest Japanese bank, also joined in. So these are the two new investors who came in this particular Series D round for us, and rest of the money was pulled in from most of our existing shareholders, right? So most of our existing investors. So that showed us a good amount of confidence in the company, not just the new investors who came in, but all the existing investors participated. Whoever has kind of funded us in last Series C round, everyone kind of funded us in this round as well. So that was one of the biggest confidence booster that the company and the management has received. And of course, on your question on the valuation, I would like to remain silent, and definitely the numbers what is quoted in the media is not close to what we are valued at.
To be clear, the number quoted in the media is $680 million. But anyway, what plans now, Madhu? How exactly are you going to use these funds? You said you want to scale business, diversify products. Do you want to extend your offerings to new categories of loans also?
Yes, Ritu, so I think there's a technical problem for every lending company, be it by bank or NBFC. There is a certain thing called as a equity to debt leverage, right? So that plays a very key role in the growth phase of NBFC or a bank, where on a single dollar what you have it as equity, there is a certain amount of dollars what you can borrow from the market to build your AUM or asset under management. So definitely, we were a high scale growing business, so we had hit that thresholds, and therefore equity infusion was very much necessary. I think that was one of the key reasons. But other than that, we had a very good pedigree of local PE funds, very good branded pedigree local PE funds like Azim Premji's Premji Invest or Motilal Oswal, right? So what we were looking for is to kind of get an international PE fund like Advent. Advent is one of the largest PE funds with a fund size of about like $30 billion plus. And just in this year, they have invested about $1 billion in Indian markets, including Yes Bank. And we were one of the small ticket investment for them. So we wanted to kind of increase that international pedigree. That's where we went and brought in this US-based PE fund, which is Advent, and Mitsubishi Bank, which is from Japan. So that was the second idea. The third one is definitely to kind of increase the different set of products what we want to launch. And as I mentioned last time as well, we are looking to kind of foray into SME lending, both secured and unsecured. And that's the new segment what we'll be looking to kind of expand.
So more geared towards SME lending, secured and unsecured. But, how many loans are you currently disbursing on a monthly basis? And where are you seeing maximum credit demand come from?
See, I think as of now, we are largely a personal loan company, right? So we provide loans to both self-employed and salaried folks. And we do about 1,400 odd crores on a monthly basis. Is what we lend out on the personal loan segment. And of course, the SME segment, as I mentioned, is yet to kind of start, and we have taken certain baby steps. But we look forward to kind of this product taking up at least 30% of our business share in an year's time, and that's where we are heading towards. Yeah.
Okay, and I remember you also earlier told us you want to cross that $1 billion AUM figure mark over the next 6 to 9 months. Where are you currently? Are you on track to do this? And what's going to drive that kind of AUM growth?
No, I think, as I told, monthly when we are doing about 1,400 odd crores, I think, so we might achieve this $1 billion AUM much sooner than even 6 months. So we are very close to that. I mean, I would say that we are just away from about like 3 to 4 months in achieving that specific AUM. So the growth comes largely from, what is the key USP, right? So we are basically a mid-India, middle-class, mid-income segment lender, right? So although everyone gets put under a similar bracket that a digital lender or a digital lending app, but there's a different segment what we cater to. More than 75% of my customers are from non-metro cities. Roughly 50% of my customers are self-employed, and 50% of them are salaried. So that's the segment what we typically deal with. It's a middle-class segment. So that's where our customers are, and the growth is driven largely because of our repeat customers. As in, like, any given month when I'm lending out $100, about $80 is going towards my repeat customers. Only 20% goes to my new customers. So since I have a large customer base, so repeat business is kind of driving that growth phenomenally.
Okay, Madhu, just one last question since we've run out of time. From the digital lending rules to the more recent securitization guidelines, lots of changes in the fintech space from the RBI. What do you make of the current regulatory environment, and how has that impacted your workflow?
See, I guess regulations in India is quite evolving in a right direction. And what is very clear today from the regulator is, so somewhere the NBFC-led businesses are kind of encouraged by the regulator. And pure play platforms, platform game where there is limited supervision is really not encouraged. So therefore, for us, it was a different game, because from day one we were NBFC focused. We have a systemically important NBFC within our group of companies, and our focus was to kind of scale as a typical NBFC would do. So the guidelines really did not affect us as much as for many other platform companies, which dependent on a third-party NBFC to kind of do their businesses. So in a way, it's this very clear message that the RBI want to kind of have a good governance on any lending activities that happens in the country, and a licensed approach is the right way. For us, it was always we were on a licensed approach, so it did not deter too much into our business models.
Sure. Sure, Madhu. Thanks very much. That's all the time we have. And good luck with your fundraise.
Thank you.
All right, moving on what's brewing today, The Whole Truth, a 100% clean label food brand, has raised $15 million in its Series B round, led by Sequoia Capital India. The round saw participation from existing investors, Matrix Partners India and Sauce VC. The fresh capital will be deployed towards scaling up the brand's in-house manufacturing capacity, hiring great talent, and in growing retail distribution. To elaborate on all of these plans, joining me now is Shashank Mehta, founder and CEO of The Whole Truth. Shashank, welcome to Startup Street. You don't call yourselves a food brand, but a truth brand. Shashank, what made you come up with this philosophy? I understand The Whole Truth is the result of your struggle with obesity and your realization that the main culprit was unhealthy packaged food loaded with hidden sugars and chemicals masquerading as healthy. So tell me, how have you managed to keep your packaged food healthy, as it's kind of an oxymoron, packaged and healthy?
Thank you so much for having me, and that's a great question to start with. Actually, we need to define what healthy means. And at The Whole Truth, we kind of hate this word because we believe it's the food marketer's biggest weapon, because, what's healthy? Is it keto, paleo, low fat, high protein, low carb? No one knows the definition, and hence, the marketer gets to sell us a new definition every year. In our definition, healthy is equal to clean. If you're eating food that you can recognize, that you can pronounce, that you find in your kitchen, then that's healthy. And that's how, that's the lens that we brought to packaged food also, that we'll only make food where we are so proud of the ingredients because they're so clean that we'll declare all of them on the front of pack because we have nothing to hide. And that's what we mean by 100% clean label. And that's what we mean by bringing truth back to packaged food.
Shashank, clean brands are a rage today, from clean beauty products to clean food labels. Consumers are hooked on to this notion. Clearly, there is immense potential. In fact, you make quirky yet educational content that helps consumers understand and decode their food choices. You also have your health publication, Truth Be Told. What conversations are you having with your consumers? What more are they looking for?
Actually, the only conversation that we want to have with our consumers is educating them about how to think about food, how to read nutrition labels, how to read ingredient lists, how to really decode whether all the claims that are being made on the front of pack, whether it's, low fat or, weight loss or detox or antioxidants, do they really stand up the test of the back of pack? We believe that if we can educate consumers on how to think about food, our sales will automatically go up because we are the cleanest brand out there. And that's our entire content effort is geared towards education for the layman consumer so that they don't get fooled by marketing tricks.
Shashank, now let's talk about the $15 million funds that you've raised currently. You plan to scale up your in-house manufacturing capacity. So will you be looking to set up more manufacturing units? If yes, where will these be and what kind of increase in capacities are we talking about?
Sure. So one of our biggest strengths and the only reason we are able to, make this 100% clean food, which no one else in the industry is making, is we make our own products. We make our own food. We've always had our production in-house. We recently launched chocolates, and even that entire bean-to-bar facility has been set up in-house. And as you rightly said, a large part of the reason we need to raise funds is we invest them into ramping up our manufacturing facility. So yes, over the next 1 year, we're going to expand our production capacity by over almost 10x of what it is today, because we want to set for the next 2 to 3 years, not just for the next year. And we are based out of Mumbai, so most of the production capacity is in and around Mumbai, and we mostly see expansion in production happening at the outskirts of Mumbai only.
Okay. Shashank, how competitively have you priced your products? Also, what are the best sellers? And if you could also talk to us about your top markets.
So we were born as a protein bar brand, like that was the first category we entered, and that continues to be our bestseller. But we recently launched chocolates, and that's pretty much like, I think by next month, that will be our bestseller. So that's the fastest growing category. In terms of markets, we're still, I would say, heavily concentrated in the top 5 metros. So Delhi, Bombay, Bangalore would be the top 3 cities. But we're very quickly getting into, the next 5 to 10 sets of cities, and that's where the next wave of growth will come from.
Okay. Shashank, since your Series A fundraise in July 2021, you've grown 7x. You've launched, like you mentioned, 100% clean label bean to bar chocolates. How has that worked out for you, A? And then what are the current growth numbers and what is the road to profitability looking like?
So the bean to bar chocolates have been it's our biggest and fastest growing launch yet. It's funny when you think about it that while, as you said, clean label and better for you is such a rage and there are so many brands
Yes.
which are entering certain categories, chocolates is the one place where there is no better for you play. We are still being sold the same old sugar-laden chocolate. And I understand it's an indulgence, but why do you have to indulge with bad ingredients and with refined sugar when you can do it with dates and no added sugar, right? So I think consumers are resonating with that proposition very strongly, and hence, bean to bar chocolates are doing very well for us.
Okay.
Yeah, and in terms of growth, we more than tripled the business last year. We quadrupled the business the year before that. We're looking to more than double the business in this coming year. So the pace of growth is fairly high, and it's being led out of both category expansion as we keep going into more categories and expansion.
So talking about category expansion, before we quickly wrap up, what are the future growth plans and any new categories or products that are in the pipeline?
So while I can't divulge the products that we launch, let's go back to where we started. We are a truth brand, and we will apply this lens of truth to whichever category of food we believe consumers are currently being lied to and being sold products under the garb of being healthy, which are not so.
So you can't
so whichever categories of food you can think of which fit this.
You can't tell me the category, but how soon? How soon?
So we now have a cadence of launching 1 to 2 categories every year. So in another 6 to 7 months, you should see another big one coming.
All right, and we wish you the very best for that. Many thanks, Shashank, for joining us on Startup Street.
Thank you so much for having me.
All right, thanks, Shruti, for taking us through that conversation as well. On that note, we have to take a short break, but don't go anywhere, because when we return, we will be joined by Virohan's co-founder and CEO, Kunal Dudeja, to discuss the company's plans going forward.
Welcome back to Startup Street. Healthcare EdTech startup Virohan has raised $7 million in a pre-Series B1 round. The round was led by Bloom Ventures with participation from Bharat Inclusion Seed Fund, Rebright Partners and Artha Leasing Limited, including $500,000 from Harshvardhan Rajgaria as part of Let's Venture, ALES Japan, Shantanu Jain of JP Morgan Chase Singapore, Deepa Bagla Financial Consultants and others. Now, this brings the total capital raised till date to $11 million. To talk to us about the road ahead, joining me now is Virohan's co-founder and CEO, Kunal Dudeja. Kunal, welcome to Startup Street. Now, Virohan is a healthcare edtech platform that trains students in allied healthcare programs. Now, allied healthcare programs, as I understand, are technicians in the healthcare industry who, form 60% of the healthcare workforce, like medical lab technicians or operating theatre technicians and more. Kunal, if you could elaborate more on your target audience and the pain point that you're solving.
Right. Thank you for having me, Shruti. First of all, for the audience, healthcare is the third largest employment generating sector in India. And as you correctly mentioned, allied healthcare workers form 60% of it. Unfortunately, in India, less than 10% of the allied healthcare workers are either trained or certified. So the biggest pain point is that 60% of the patient contact is with people who are neither trained or certified. And the government is doing wonders by actually launching an allied healthcare bill. And so there's a massive demand-supply gap that we are bridging.
Okay. Kunal, Virohan has trained over 7,000 students across its courses. You've seen close to 96% completion rates and close to 98% placement rates within 1 month of program completion. So take me through your course offerings and what is unique about them. Also, if you could talk about Virohan's partnerships, how are you helping students get jobs?
Right. So, Shruti, we're partners with over 1,000 plus employers across India, like Fortis, etc. Now, what is unique about our training is that 50% of our training is actually practical and hands-on training in a live environment, unlike any other higher education system. And the remaining 50% is further broken down into technical skills, life skills, soft skills, and power skills. So that is the reason actually 78% of our students get pre-placement offers during internships itself, and 98%, as you correctly mentioned, get jobs within 1 month of completing the program. And we're talking about an industry that is growing at a 22% CAGR for the last 7 years. So with this approach, we actually are solving for the employers, and that's why most of our students get jobs.
All right. Kunal, give us a sense of who are these students, what are the demographics, who all undertake Virohan's courses?
Right. So actually, interestingly, close to 60% of our students are women.
Okay.
About 40% of our students come from non-urban areas, and about 60% come from urban areas. And they come from family incomes with as low as 2.5 lakh rupees, going up to about 8 to 10 lakh rupees per year. So we're actually catering to the large mass segment in education, where people are ranging from 2.5 lakh rupees income to about 8 to 10 lakhs income per year.
Okay. And how competitively have you priced these courses?
So I would say we are, very competitively priced. We are lesser than the top-notch education, providers, but more pricey than the very, very mass providers. So we are actually in the median, or actually below the median price.
Okay. Kunal, let's quickly talk about the $7 million fundraise. You plan to expand to over 200 new campuses in India and train over 10,000 students. In fact, you're also planning to use the new funds to develop and launch new training programs. If you could elaborate on the expansion targets and also share timelines with us.
Right. So, Shruti, there are over 80 allied healthcare job roles defined by the government of India. We're currently only offering 5 of them.
Okay.
We're looking at launching another 15 in the next 2 years. We're looking to expand to about 200 locations across India, and we're looking at doing 10,000 students in the next year itself. So we're looking at growing from 7,000 students in the last 2.5, 3 years to 10,000 students the next financial year itself.
Okay. And you also plan to scale your omni-channel training platform infrastructure and content in vernacular languages, along with developing new features to further increase learning outcomes for students. What other languages are you eyeing, Kunal, and what new products are in the pipeline?
Right. So we're looking at, various languages for the South region of India, languages for the Western regions, including Marathi. And in terms of product line, we're trying to make the experience as seamless as possible for the student. So we're including, real-time connects with the employers, payments, etc., on the platform itself, and various other seamless integration, which will actually get the student onto the platform, help them finish the program, and seamlessly connect to employers end-to-end on the platform itself.
Okay. You're also looking at global expansion. Next on radar, I believe, is the Japanese market. And of course, you have the support from your existing investors, ALES Japan and Rebright Partners. So what is the kind of impact you're hoping to create there?
So actually, as we all know, Japan has one of the largest aging populations in the world. I mean, a large percentage of their population is now aging, and there's a massive demand for healthcare workers in Japan. The reason for partnering with ALES is because one of the LPs runs one of the largest staffing companies in Japan, and we are looking to partner with them to basically make sure the talent from India who's looking to work abroad can also go there and work in Japan.
Okay, one final question, Kunal. If you could take me through your business growth numbers and tell me how you're making money, what is the revenue model, and by when do you hope to turn profitable?
Right. So from a fundamental unit economics level, we are highly profitable because there is a very high tech dependence. Our gross margins are upwards of 70%. Our CM2 contribution margin 2 is upwards of 30%. At a unit economics level, we're already profitable. Now the question is, are we looking at scaling more rapidly and therefore investing the money that we make into growth? Or are we looking at, driving profitability? At this point of time, I think we're looking at scaling, and therefore we're putting all the money that we make from our profits back into the company for scaling. We're looking at being the largest healthcare training provider, not only in India, but globally, and then capturing that demand. And healthcare, by the way, is the #1 employment generating sector globally. So we're looking at a massive demand and supply.
Yeah. Kunal, clearly a massive opportunity, and we wish you the very best with all your expansion plans. And many thanks for joining us on Startup Street today.
Thank you. Thank you for having me.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.